Started. Hopefully more people trickle in. Um, we were hoping sharing this in the group would bring more people, but who knows? So far, there's only about like 20 or so in here, 25 maybe. But my name is Connor O'Brien. I'm the managing director for PersonaFi. If you haven't figured it out, PersonaFi Investments, we're the company that puts on the Facebook group. Currently working on an app which is going to make it easy. One day you can log in and see exactly what your friends hold, what they buy and sell. It'll be easy, so you'll never have to ask anyone ever again, what should I buy today? Because you'll easily be able to see it all in the palm of your device. So that's coming. There's news coming out about it all the time, but we also have the newsletter as well that there's a few of us that put it together, and that has done pretty well for a lot of people. So big thing here tonight is obviously Dan Ganancial. Dan is a wealth of knowledge when it comes to trading, investing, all of that. He has another Facebook group that he runs. You can share a plug if you want, Dan, with that when you're talking. And he's going to kind of share today his portfolio, how he trades, why he trades, what he does for research and all of that. And then obviously Professor Haven is still here. I think he's eating some Doritos right now.
Yeah, my blood sugar's low, so I'm eating something.
This is the diabetes, dude. You know, it gets you.
Oh, it's a perfect excuse.
That's right. Just snack all the time. But all right, Dan, if you're ready, I think Dan's going to share his screen and kind of go over it, but I'll let Dan take it over from here.
Yeah, cool. Let me do that right quick. Can you guys all see my screen?
We can see it, man. You've got it ready. Whew.
Presentation. Gotta come prepared. All right, cool. So yeah, welcome everyone. Thanks for joining our call today. As Connor mentioned, my name is Dan Ganancial. I'm a moderator in the Let's Trade and Invest group. And then quick background, I'm also an investor myself, just like many of you. My primary thing has been long-term investing, and I'll get into that in a little bit. But I also do options trading as well. Try day trading. It's fun, but I don't really have the time to monitor. So options trading and investing work for me. I've been investing since college, and that was years ago. And we're talking like double-digit years ago. It's always been a passion of mine, something I've been interested in ever since I was in high school. Read a lot of books, and happy to just share my knowledge with you all today. So with that said, let's get into it. All right, so before we get into my holdings and all that, let me just go ahead and say this on behalf of all the admins and the mods in the group. So our goal, and you probably already picked up on it, but our goal is to help you all make money in the stock market and ultimately succeed in trading and investing in the market, right? And part of the way that we do that is by offering our guidance based on our experience in trading and investing. There's several of us in the group, Chris, Professor Chris, myself, Ken, who's the guy that started the group, and there's others as well that were previously licensed investment professionals. We've worked at firms like Vanguard, Merrill Lynch, a bunch of Schwab, a bunch of other firms. So a bunch of us, we've all learned valuable lessons like during our time at those firms, as well as just through the years personally investing and trading. And obviously we'd like to pass that on to all of you so that you can learn from our mistakes primarily, and thereby become a better trader and a better investor. So let's get to it then with that. So last week there was a request from one of the people that were in the call last week that, you know, some of the admins and mods share what we are personally trading and investing in. So I'm happy to share my portfolio with you. But before I show you my holdings, again, let me give you a little bit more background and context just so you know where I'm coming from in terms of like how I approach investing and trading, and insights as to myself as well. All right, so my trading investing style. So as I mentioned, started years ago, and I'm primarily a long-term buy and hold investor, right? I believe that buy and hold is still the best long-term strategy for the average investor. And by average, I mean someone that just doesn't have the time to really sit there and trade every day. So like, let's say you're like a busy professional. I personally believe, and this is again, my opinion, that buy and hold is still the best long-term strategy. Long-term to me is definitely, you know, 3 to 5+ years. In some circumstances, 2 years I consider long-term, but you know, just expect long-term to be, you're going to hold it for several years. I typically like to play specific stocks in sectors that I'm trading and following. However, if I don't know which company to get into, or I don't have like a preference of a specific company, then I'll just buy an index that basically tracks the entire sector to get me broad exposure. And that way I'm like still in the market and in that sector, even if I don't have a specific stock that I'm playing. In terms of intermediate plays, I do intermediate plays. Intermediate to me is anything from a few months to like a year or two, just depending again on the stock. It could turn into a long-term play for me if I really like the stock and want to hold it for a long time. But I usually just start out playing something for a few months to see how it's tracking in the market, see how it's doing. And then if I don't want to stay in it, then I'll just, sell out for profit. I typically play my intermediate plays with call options. And the reason why I call options is if you look at the data and if you look at the market historically, markets move in cycles, right? I forget what the average, it's like 7 + 8 something years. After every recession and downturn, the market then picks back up. So there's more, the trend for going up is more than like the trend for falling down. Like there's an analogy that says it's like stairs up and the elevator down. Same thing when you look at, the market over years and years and years, it's the same sort of pattern. So I do my intermediate plays with call options because again, I believe that the market over time goes up. If it goes down, it's very quick, very short in the grand scheme of things. And then if I wanted to go long, then I'll turn that into actual stock or just play more options. In terms of short term, I also do short term. So I trade short term, and short term to me is basically, it's just plays that I'm speculating on in terms of price movement within a certain time period. So if I think like this stock is hot, I'm following the hype. I think it's gonna keep going up. I'll play it, but then like obviously in the back of my mind, I'm like, well, the hype can't continue. So at some point it's gonna come crashing back down. So I'm just gonna play it short for now. However, the way I play short is, a lot of people gamble on the upside. I actually play on the downside. So I trade on margin, and I don't recommend it to anyone beginning. It's very risky, but I trade on margin by selling naked puts. Or I do sell cash secured puts. So I put up cash to secure the collateral, which is the stock, should it get assigned to me if I'm wrong on the price movement. Basically, the reason why I do that is for me, trading short is just to capture option premium, right? I'm just trying to generate, because like when I sell a put, someone pays me for that contract, right? So I'm just trying to generate upfront money versus like waiting for a stock to pop. That's just a personal choice. As I mentioned, you can play it the other way as well. That's just what I like to do in terms of short term. All right, so then how do I choose my stocks? So for my long-term investments and intermediate as well, I pick companies that follow 3 criteria. One, I pick companies that I believe in that are industry leaders or command a top position in their space. Reason being is that if they're industry leaders and if they command a top position in their space, they're gonna get more traction, they're gonna get more interest from the institutional traders, they're gonna get more interest from the retail traders, and that's what you want because that's what's gonna drive the price up. If there's a stock that doesn't have a lot of interest and not a lot of people are trading it, or it's just not like a good stock, meaning it's not a good company, like it's not a leader, it's not poised for success, it's not poised to be a strong proponent of growth over the long term, then it's frankly just not going to do as well when it comes to price appreciation. Because there's such a thing as called fundamentals. I know like right now people are just like trading a lot on technicals, but from a long-term perspective, fundamentals actually really do matter. And so when I'm looking at companies, I also am looking at the fundamentals of that underlying business, just like Warren Buffett does, to make sure what I'm getting in is going to be, a workhorse for me over the course of several years.
And Dan, we had a question come up.
Yeah.
You said, realistically, what % of your gains are from premium? And they said context, weighing the risk versus reward on doing this.
Yeah. So great question. I will full on be transparent here. I'm very risky when I trade short. So sometimes I'm not even looking at the percentage gain of what I'm putting up for risk, which is like the collateral I'm putting up or the buying power I'm putting up. Sometimes I'm strictly just trading just to generate absolute dollar value, right? There's reasons behind why I do that. You really have to know the price movement of the stock and the expected movement to make sure that you don't hit you don't get exercise, like it doesn't hit that strike price that you're selling at. And I play pretty close. I mean, Chris knows because I share with him my stories, but I play pretty close to the stock trading to get the maximum premium I possibly can, but it's super risky. So for me, if I were to go percentage, usually what I like to do is if I'm going to generate income off the amount that I'm putting up, at minimum, I want 10% or more, right? Weeklies, it's kind of hard to do, but if I'm doing monthlies or longer, like several months, it gets a little bit easier to hit that 10% return on what I'm putting up to, sell that contract, sell that put.
Yeah, because just so everyone knows, the theta decay, it is exponentially increased after or once it's closer to the option. So once it hits that month, that theta is going to greatly increase. So if you get one maybe 2 or 3 months out, you'll get a higher premium. Just so if people wanted to understand that.
Cool. We good, Connor? Should I move on?
Yep, move on.
Okay, cool. So going back to my points, the other two things, like obviously I talked about exhibiting strong growth potential over the long term, and then I try to play long term my picks in hot or burgeoning sectors. So that just basically means I used to be big in value, and again, this is a personal thing. I used to be big in value, but value for me over the past 10 years hasn't really produced the return that I'm personally looking for versus growth stocks. So I got out of value. I still have a few holdings, but really I got out of value and I'm primarily heavy into growth. And you'll see it in the upcoming slide. And by growth, I'm picking certain sectors, certain areas that I think will do well, which I'll also touch on like as we keep going. For short term, going back to, talking about selling puts, I purposely pick stocks, or I guess companies that have high volatility. So like the IV plays a lot, implied volatility plays a lot in terms of like options that have higher premium. Because for me, I want to capture as high a premium as possible for the amount of money that I have to put up or for the risk that I'm taking on by trading on margin. So yeah, for short term, I pick stocks that have high volatility, and those are basically ones that, have a wide movement, and they've moved pretty wide over the past couple of days in order just to capture the highest premium that I possibly can. So that's short term. All right, cool. So my holdings and my plays, I basically just screenshotted. I will pause here. I'll take a while to go through this slide. That way everyone can look through all these. I've captured pretty much everything I hold, as well as the options that I'm holding on those. Some of them I just hold straight options. Most of them I have shares as well. You can see what I'm playing short because it'll say a put and it'll have like this week or next week's expiration or even a month from now. You can see what I'm holding long, options wise, and then obviously shares, my intent there is to hold long. So yeah, so these are, again, my current holdings and speculative plays. Again, I have a mix of both long, intermediate, and short-term holds. As mentioned, my portfolio is heavily weighted toward growth stocks, primarily in the tech sector. But I do hold a few value, like Disney's in there. I guess you could say Berkshire Hathaway's a value more than a growth, just based on Warren Buffett's mentality and investment methodology in terms of what he picks. I also do have a few funds, by funds like ETFs or mutual funds. And as I mentioned before, that's mainly to broaden my exposure to a certain sector if I don't have a particular pick in that sector. So I'll just call out some. So for example, like DRIV, that's a index tracking ETF on the electric vehicle space, right? I also have Tesla, but I wanted to get broader exposure just because, based on what I've been reading, there's supposed to be like 55 new entrants into the EV space this year and ongoing. So there's going to be a lot more competition. So then rather than although I do have Tesla, I will again admit that. I also want to be able to be exposed to all these other companies because who knows, one of them might pop, right? I have some Vanguard mutual funds and funds there. Emerging markets mutual fund I have. That's primarily heavily invested in China as well as other international areas. For me, which is easier to go broad and get exposure.
I've got a question for you. Why don't we see any ARK ETFs up in here?
Because I don't have ARK because I'm playing specific stocks. So Tesla, Palantir, right? So Tesla's like a big holding of ARK, Palantir, and there's some others that I've been eyeing, but it is one that I've contemplated holding. My thing with ARK though is it's definitely broad, but it's not broad in the sense of a sector specific broadness. It's like broad in over many different sectors.
Yeah.
And so I kind of want to go a little bit more specific and just only pick specific sectors.
Okay, and then Margaret had a question. Which emerging market ETF? Question mark.
Oh, so I was kind of, my hands were tied in the ones I picked because this one I hold in my 401k through work, and they only offer like 401ks. Most of them don't allow you to pick individual stocks. So the fund that they offered was the Vanguard Emerging Markets Index Fund. That's the Admiral shares. So I picked that one. That's the VEMAX. And that's the one that I'm holding in my 401k.
I actually have a question for you, Dan.
Yeah.
Do you invest in the emerging markets overseas, like for Africa?
Good question. So I don't have any specific stocks in Africa. I haven't gone through the complete holdings list of VMAX. I think there might be one in there or not. I have been watching Jumia, which is like the e-commerce stock, right? I think it's for Africa. But I don't have any specific ones right now at the moment.
Okay, cool. Thanks.
Cool. Any more questions? Or are we good?
I think we're good for right now. Or actually, here's one. Can you explain the difference between Palantir 17.5? So she's talking about the calls.
Oh, yeah. So, well, okay. So going to my strategy. So basically, the way I play IPOs, especially DPOs, which this one was, which is a direct public offering, when something like Palantir hit the market, right? So it wasn't an IPO. So institutions couldn't drive up the price before offering the shares to retail investors like you and myself. So we basically got the shares of Palantir at the actual price value that it was that the employees had it at, right? They basically just sold us their shares is what a DPO means. So we got it at that price. That being said, like based on my research and based on where I was tracking, I'm like, oh, this is gonna, do well over the long term. So what you're seeing is my different calls on it. 17.5 is just the strike price for that option, meaning if it hits 17.5 plus whatever I paid for it, which is my break even, I'm making good. I mean, I'm making good money as long as it, is higher than where I bought in at in terms of where the stock was trading, which if you guys want to learn more about options, Professor Chris has really cool videos out on that. So you should watch it because he explains it in detail, what I'm talking about right now. So I won't get into the detail, just go watch his videos, super helpful. But those are the different calls I'm playing. So my 17.5 ends on Feb 19. And that one I'm playing, I picked Feb 19 because earnings were going to happen sometime in mid-Feb. So I'm playing that one. That's like a shorter play. The other ones were just prices that I picked based on where I thought I could hit, or they were safe plays. Like for example, I have another screen I'm looking at here. The Jan 2023 at $10. I didn't have to pick it that low because the premium was higher, but for me, I paid $660, so $660, but 6.6. So add that to the 10, that's 16.6 is my break even. As long as Palantir is trading above 16.6 by January 2023, I wanted to give myself the option to either outright buy the shares, because then I would be sitting on a massive profit above my break even, or I can just sell the call for profit. But I'm playing, so my leap, that's a leap option because it's several years out. But that's my strategy on leaps. It's like if I really believe in the stock and I possibly want to own it, I'll pick a lower strike price to give me the option to possibly own the stock.
Can you explain a leap real quick?
Yeah, it's like long-term something anticipated security. I forget the actual.
Yeah.
Long-term equity anticipation security.
Yeah, exactly. So basically it's an option, but it doesn't expire for like 2 years in this case. So I have 2 years of time to just hold it and let it accumulate in value. Cool. And then, so
There was just a quick question, but I think I answered it for you. What's your number one pick for 2021?
My number one pick for 2021 is Palantir. My personal number one pick.
Yeah.
There's some others that I think will do well. Like and I'll get into it in these other slides, but my personal pick is Palantir. Cool. All right. And then, you guys can see there, I have a bunch of short-term plays, which are the puts I was talking about with very short expiration dates. Most of my holdings, if you'll notice, they're focused on 4 key areas. And these are like sectors and areas that I see as having really good growth potential in the coming years. That's not to say that these are the only 4 that will grow and have great potential. There's other ones as well. It's just, again, a personal thing, personal opinion, personal choice. So what I'll do is in the next couple of slides, I'll actually take you guys through what those are and my reasoning behind those, right? But before I do that, does anyone have any other questions on any of my holdings?
So somebody did ask, what's a good entry point for Palantir or buying point?
Yeah, so right now they're strong, and I don't have like the chart in front of me, but there's like strong resistance and support levels, right? So a couple of weeks ago, a strong support level was around the 21, 22 area. I think we've moved up since then. And so now it's more around like the 23, 24 area. I mean, it's only $1 more, but there seems to be strong support in terms of like, and I monitor every day. So if it ever gets down to that, it like hovers and it always bounces back. But there's really, really strong resistance at 28. If you guys have noticed and watched for the past month, it's been consolidating and it just hasn't moved out of this 22, 23 to 28 range. There's reasons for that, which I won't get into because that's a whole nother conversation, but ping me offline or ping me in the group. I'm happy to share with you my theory on why it's been consolidating or why it hasn't broken out of that range. It makes for really good day trading because you can play the ups and downs because it's within a defined range. It makes for really good options trading as well. And then if for a long-term entry, within that range right now seems to be a great buying point. I mean, obviously you want the lower part of that range, but like once we break 28, then there's, that's the next pattern trend, however you want to call it. To the side.
And there was Jason did ask, and this is kind of a difficult one. He says, so my 9.5 Tilray, so strike price 950, expiring on 129. I should exercise ? And I would say,
so I don't follow Tilray. I'll be completely honest. I don't know where they're trading at, and I don't know what their price movements look like. But the golden rule is like, if you're in profit and you've hit your profit percentage, whatever that is, 10, 20%, 30%, whatever it is for you, like it's always safe to take profit and move on. As Chris mentioned, weak hands are green hands, which is you could hold out and gamble for more profit. And that's great if you're right, but it's always better just to take profit when you have it and then go on to the next trade. Because if you think about it, even though it's a smaller profit, if you keep making enough, smaller profit wins, that all adds up versus like waiting on one to hit the big jackpot.
So and he did say it's 760% up right now. So what I would recommend, don't exercise that. You sell that options contract and you just walk away with money. Whereas if you exercised it, you just have the right to buy it, and then you actually have to buy the stock at 950. So you're going to be spending a lot of money to get the stock, but it'll be worth more. But I think it's just better to just wipe your hands clean and sell the contract.
Yeah. And for me too, like, so it's your break-even price that you have to, pay attention to. It's not the strike price, because it's whatever you paid for the premium to get that call on top of the strike price. And that's what you're really paying for the stock per share. Yeah. Right. So unless Tilray is like way above that to where it's like exercising looks attractive. Yeah, I'd do what Connor said and just take your profit.
And when he says way above that, I'm talking like you've got something that's $10 and it's now trading at 100. That's something where it's more attractive. But like double the price, it's attracting to me is that 760% gain. Like if you want to give me that option as a gift, I'll sell it for you.
There's just different strategies with exercising the calls. But then again, you also have to think about if you exercise that call you're going to buy 100 shares of that. So that can also eat into your buying power. So what Connor was saying with selling these before, I would say maybe sell, if it's still super up and it still keeps going up, maybe wait till a Wednesday before the theta really starts kicking in, or even a week before. Take the profit. You have more buying power now. Then go again with another trade. Unless you really want to hold the stock, like if it's a dividend stock and you really want to, you got it at a really good price, like if it's double, then that may be something you want to look at too, because then you can profit from the dividends.
And I think we're good on terms of questions, so you can keep rolling.
All right. So
well, I had a question. You didn't see it. Why do you have puts on Palantir? Do you want to care to explain your risk management? Because people should know that too.
Yeah. So I'm bullish on Palantir, but you can play Palantir both ways. Like people, when you're a beginning trader, you think, oh, I'm bullish, so I'm going to play calls. But you can actually play puts as a bullish strategy as well. So for example, if you notice there, and again, I'm looking at my other screen, I have a put for January, 2023 at $20, right? So if I'm bullish on Palantir and I think it's going to be trading above 20 come January 2023, obviously I'll buy a call because I want that upside, but I'm also going to sell a put because then that means I'm going to generate income by selling that put at $20 for 2023 because I don't think it's ever going to hit that price. So that put will actually expire worthless. I mean, assuming it, is trading above $20 come 2023, which I think it will. That put will expire worthless, and I just made money by basically selling that put against my position, against Palantir, using the put as a bullish strategy. Hopefully that makes sense for people. And then the cool thing is I get paid a premium up front. So the money I collected by selling that put, I can now use that for another trade, right? And if you guys know anything about time value of money, obviously money in the present is more valuable than money like down the road because you can do more with it, and if I can use that money to make more profitable trades and compounding and interest and all that, it's a good place. So my puts aren't because I think it's going to go down. My puts are because I don't think it will be at that price come that expiration. But I will be honest here. My January 29, which is next week at 30, it's not going to hit. So I'm probably gonna have to roll that forward. I was probably a little too, what's the word I'm looking for? A little
stoked.
Yeah. So that's a wrong call on my part, but the good thing is I can roll that forward and just keep rolling it at the 30 strike every week until it finally hits 30. And then that put expires worthless, but then I've collected all that premium in the meantime. Because the cool thing about that is if I roll it forward, I basically buy it back on Friday, like at, the last hour of trading. So the theta is low because it's a put, it's different, but the theta is low. So I buy it back cheaper than what I sold it at. So I pocket that difference in premium. And then by rolling it over, I have to buy a $30 strike or one that's lower, basically something to cover what I have to pay to buy back. I just have to make sure I sell it at a premium that's equal or more. But if I keep it at the same strike and I sell it for the next week, which would be Feb 5th or something, the premium on the $30 put should be more than the premium I pay to buy back the 29th $30 put. And so I'll still make money. And I just keep doing that until it finally hits 30. And then I just don't have to worry about it anymore.
So then somebody did ask, why not play vertical spread?
Vertical spread. To be honest, spreads are something that I want to get into. I just don't.
Yeah.
That's just a personal choice. I just don't.
So here's what I wanted to say before we go too far down this. This is very complex stuff. Okay, selling puts is risky, as Dan will tell you, and that. So this might be a good conversation or topic for a strictly options video or Zoom class in the future. But Chris, did you want to chime in?
People were talking about spreads. Just real quick, doing spreads kind of mitigates some risk, but you still have, you can still lose potentially, however much you put in. But the reason why Dan doesn't really do the spreads for right now is because if he's just really bullish on Palantir. So if you're super bullish on Palantir, then there's no logical reason to mitigate some of the risk, to mitigate risk, but then get a limited amount of return. Whereas with Dan's calls, those have theoretically an unlimited set of return, whereas a spread does not.
Yeah. And then let's see, what is your allocation percentage per position for options and stocks?
Yeah, good question. For me personally, it's a smaller percentage. Like most of my holdings are in shares, like the actual shares, and it's a personal choice because I would rather hold the shares and then sell covered calls against it versus just having my whole portfolio all in options. Another reason why is options are risky also because you're defined by a certain time parameter, right? Shares I can hold forever theoretically, and so my risk on that by holding shares is a lot lower than holding options. But in terms of my holdings, I hold more shares than options. In terms of options, I don't know what the exact percentage is, but it's definitely less than 20%, maybe even less than 15% of my portfolio that I allocate monies towards in terms of the options. And keep in mind, a lot of these options are puts. So I don't actually own the put because I'm selling the contract, right? So I'm selling it against cash or I'm selling it against buying power I have in my portfolio.
Cool.
Yep.
I don't think Isaac said he doesn't understand it. The strategy, it's okay. That's for another time.
Yeah.
Let's not go into that too much further than we need
More than
to.
happy to explain that. Professor Chris and I and Connor can get into it, but yeah, we'll do it another time.
Price target for Palantir by the end of the year.
I mean, myself, I hope it hits 50. I've been reading reports that potentially that's like a reasonable price target. Depends. Like we'll see. I think 50 is doable. There's people saying 100. I don't think 100 is going to happen by the end of 2021, but 50 is probably reasonable to assume.
I think it's going to hit 100. So I'm just going to keep my hopes high here.
Okay? You're wearing the shirt, so you got to say that. No, I'm just kidding.
That's right.
Cool. All right. No more questions. Let me move on because I definitely want to save some time for Chris. So I was going to talk about like the 4 key areas for me that my portfolio is focused on. And again, there's no right or wrong sector. These are just a personal choice for me personally, like why I'm choosing these, but there's other sectors that are going to be solid too, but I'll give you what I'm playing and the reasons why. So the first one is data. I don't know if you guys have heard this before, but like data is the new oil. It's a saying that's been going around actually for a couple of years now. So I'm playing Ultrix, which is AYX, Palantir, PLTR, and Snowflake, which is SNOW, obviously Snow. There's a lot of other great data companies out there. These aren't like the only ones you can play, and these are by no means are like the top 3. I mean, there's a lot of other solid companies. I like to play companies I understand. So I work in tech. My job, I'm not a programmer, I'm not a developer, but I work in tech, so I'm in the scene. And data analytics is something, it's like a, part of the data area, sector, whatever, that I understand well, mainly because I'm on the business side, and so data analytics makes sense. So I play data analytics companies, which is Ultrix and Palantir. In turn, there's like other, like Snowflake is like a data warehousing play, obviously, and I'll tell you why. Then the third is data compute. So AWS, which is basically owned by Amazon, they're solid. So why data? So if you think about it, right? So like companies they are, and they're going to continue to generate massive amounts of data. And by this, like, I mean, like we're seeing a massive flow of user data being generated by so many companies out there, right? They rely heavily on the insights that the data provides, right? In order to help the business, the company grow, like help them understand consumer behavior, help them improve customer engagement, brand experiences, and ultimately use that data to help them drive more revenue, like get more sales. So because of that, and because like the more companies are, producing and churning out just so much data, data has to go somewhere and do something. And so go somewhere, like someone has to house the data, right? They have to warehousing, but they have to house the data, which is my play on Snowflake because they're, one of the top for what they do. Someone has to be able to glean insights from that data, which is the key thing. Like you have all this data, but if you can't get any insights from it, it's useless. So that's what Alteryx and Palantir enable businesses to do. And basically, you know, what patterns, trends, what information can we get from this data? So because of like this growth that I see, and I'll give you a stat here. So like the global big data and business analytics market, I forget the source, but I think it's like Statista. I forget. Anyway, it's one of these websites. They're projecting the data market to grow from 192 billion roughly, and that's in US dollar in 2019 to 446 billion by the end of 2025 at a compound annual growth rate of 15%. So you can just tell like this sector is going to pop. I mean, it's going to continue to pop. And as long as businesses are having interactions with clients and customers, like data is going to continue to be generated. So for me, it was a no-brainer play. Like this is a hot sector. It will continue to grow. So I want to be positioned in companies that I believe are leaders. Again, going back to my other slide, leaders in their respective spaces for what they do, which I believe are these three for sure, but there's others. Yeah, so that's one sector I'm playing. The next sector that I'm playing is e-commerce. And the reason being, so this pandemic actually brought a lot of industries forward. And what I mean by that is if you look at historical projections before 2020, people had like their curve and whatnot. But because of the pandemic, a lot of businesses have seen their growth pulled forward 5 years. In the case of e-commerce, the statistic out there is that the growth of e-commerce has now been pulled forward 5 years to like today. So that's why there's like a bunch of companies like Amazon popped, JD.com, which is a Chinese e-commerce company, popped, Alibaba before this whole fiasco popped. There's just like a ton of them, that e-commerce shops that popped, right? I think long-term, e-commerce is still going to continue to grow. And the reason why I say that is because based on research analysis that other people have done, there's a movement toward buying things virtually, so online shopping, right? Right now, online shopping makes up a small percentage of the overall buying behavior, but the projections are for it to increase over the years. And so for me, I'm like, well, great. If that's the case, if e-commerce is projected to grow, I want to be positioned to take advantage of that growth. So I'm playing this for that very reason. These are the four that I have currently. And again, there's other ones as well. These aren't the only ones. People have asked me, why don't you play shop? I would. I think it might have some growth, but a lot of it I think we've already seen because shop opened up. What did IPO at? Like 10 something, 17? It was low, and now it's over 1,000. So I don't know how much more it has to go, but who knows, right? But like Etsy. So I'll give you guys some tips here. So part of trading is getting in at the right entry point or understanding what drives stock prices, right? So like Etsy, when they were included into the S&P, or when they were announced that they were going to be included into the S&P, and same thing happened to Tesla as well. Like the stock obviously popped, and there's research out there that says, I can share with you the paper, basically says, stocks that get included into like the S&P specifically tend to see a rise in their price following the inclusion. As well as leading up to the inclusion, because like funds that track that index have to buy in. So I got Etsy around 113 when I bought my options, and it's trading at over 200, I think close to 220, maybe slightly below that. So I'm sitting pretty on that option, which is nice. JD, same thing I already told you, like I believe long-term e-commerce. JD, it was trading. I was waiting for the fiasco to kind of die down with like China and the delisting. So I got JD when it was around 80. It never really dropped to maybe 79, but it's picked back up now. It's at 90 something. Ozon, which is a Russian e-commerce player. I think they're either number one or number two. That one's a longer term play for me. And then Levi, which is for Levi's, that one, I'm a fan of their jeans, and they were trading pretty low. And so I just decided to make a play. They're more a rebound play for me because I think, once the pandemic finally fully ends, retail will bounce back. So I'm kind of just holding on to that to see what happens.
There was a couple of questions here.
Yeah.
What are your thoughts on BIGC?
Oh, Big Commerce. So they had a strong IPO and they popped all the way up to like 100 something, but now they dropped back down, which I'm not surprised because like sometimes the way that IPOs happen is like there's a big hype, the stock price goes up, and then after the hype dies away, we actually see it revert back down to reality in terms of where it maybe really should be in stock price. I know that a lot of people use them, like, and this is me talking from my tech experience and just my business experience. I know they're a shop that a lot of companies are using. So I think long-term they'll be fine, but if you're trying to play it short-term, I don't know, like if there's gonna be any sort of immediate pop in the short term. Long-term, I think they'll be fine. But short term, I mean, they already had their pop after the IPO and now they're like way back down to, I don't know the exact price, but I know they're down from their highs by quite a bit. So,
and then there was another one, and I don't know if I'm saying this right, Tokopedia.
I've heard of them. I don't follow them. Whoever that is, if you want to reach out to me like offline, feel free to. I'll look at it, but I don't follow them. But is that a Japanese e-commerce?
It's Singapore.
Okay. I mean, like overall, globally, e-commerce is going to rise because like the buying behavior of us in the US is not just relegated to the US. Like people all around the world, are transitioning to buying things virtually, online shopping and this and that. So I'm sure like leading players in the e-commerce space in their respective countries will do well over the course of the next several years. I just don't know enough about them to say like, oh yeah, they're the horse that I'm going to ride, in the APAC market for you.
Yeah.
But happy to like look into them.
No more questions, so take it away.
All right, on to the next. So the next one I'm playing, and this is the one that everyone's playing, it's basically clean and renewable energy. And the reason why, I mean, it's pretty obvious, right? Like, Biden was elected, his administration, like wants to put out this clean energy bill. Now that the Democrats have basically, if I'm not mistaken, like sealed the deal on all three both chambers of Congress and the presidential seat. So now they're in control. The thought out there by traders, investors, and analysts is that that bodes very well for this clean energy bill to be passed in the next year or so. If that happens, then this space will do very well. And we've already seen it do well. So like a lot of things that people don't realize is like institutional traders, they're smart guys and girls, right? They get information before we do, right? And so they've already run up the price on a lot of these stocks in anticipation of the Dems winning both chambers of Congress and the presidential seat, and in anticipation of this clean energy bill to get passed. That's why you see Tesla, like it's over 700 something percent, close to 800%. Plug had a run, just a bunch of these have had already a run. That's not to say that it's over. I think there's still opportunity here, right? In 2021. And again, especially if the clean energy bill gets passed, it will bode well for all these companies. There's so many out there, and there's like a bunch of new ones that I feel are popping up all the time. So there's so many plays that you can make. For me personally, like Tesla for sure, Driv, which is that ETF on the electric vehicle sector, ICLN, which is clean energy. It's an ETF on clean and renewable energy companies. Plug, and then Lit, which is like battery and lithium ETF. I'm playing all these mainly just because, based on what I just told you guys, I think 2021 will bode well for this sector. And it's not a secret. Like you can just research it online. There's a bunch of people talking about how they think this sector will do well. It's already done well. It's already had a run. May correct in the short term, but long term it'll be fine. So these are what I'm playing in this sector. I'm also obviously like watching a lot more other ones. I mean, there's some smaller stocks like, all the battery charging stations, all the companies that are in those and producing those. I'm watching a few because obviously electric vehicles, they're going to need places to charge. And I think mobile charging is going to be the next thing because right now you're kind of relegated to, stations that are like set in the ground or at home, but mobile charging will, it's kind of like the next thing. So anyway, I'm eyeing those. I'm eyeing this sector. I know a lot of people in the group are playing this sector as well. So yeah, I mean, this is nothing new. The last one I have, and these are my four main ones. There's some others, but these are my four main ones. The last one is rebound plays. So
before we move on to that one, hold on.
Yeah,
So Isaac asked, is plug overvalued? And then he asked, is plug a buy or should we expect a pullback?
Good question. So analysts came out saying that they think it's fully valued, right? And as we've noticed in the stock market, when an analyst comes out and says like, oh, the price target should be this, or the price target should be that, or this stock should be a sell, or this stock should be a buy, the market obviously reacts. So we're seeing this pullback in plug because I think it hit 70 and now it's back down to like low 60s, and it may even bounce below that into the mid 50s. I hope not, because I sold a put against it that expires this Friday at 55. So I'm hoping it stays above 55 so I can get my premium. But either way, then we saw the pullback last week as well. So I think there's a pullback because of that report specifically. I think it did run up really fast, really high, really quick. So this pullback I think is warranted. Do I think it goes back to where it was trading before this run up, which is what, like in the 10, I mean, the low, dollar figures? No, I don't think so. Where it settles, I think, so if you follow options, there's this thing called weekly expected movement. The weekly expected movement, and someone else in the group told me this, so credit to Joshua Fate. He basically told me like the weekly expected movement for this stock by the end of this week is down to 55. If it hits 55, there's a gap fill down to 53. If it hits 53, then there's a gap fill down below that. But I didn't get into like what that was. It'll probably be sub 50 or even below. We'll see what happens the next 2 days. I can't really tell you exactly where it's going to be in the next 2 days. Right now, it's on a downtrend. If you look at the daily, there's more red candles than there are green, and it's trending down. But the MACD, which is like the moving average convergence divergence indicator, shows that we're still in a daily green trend, but it's starting to slow down. We can get into more detail on what those technical indicators mean, but yeah, I wouldn't be surprised if it continues to drop in the next couple of days. So I would wait. If you're trying to go long on this, I would wait to go long until we see it kind of settle, because it's definitely not settled down in terms of dropping. It kind of hit 60 in the last week, and it's been trading around. It went up then like earlier this week, but it's back down to around 60. So I'm curious to see what happens tomorrow, but I'll be monitoring it as well.
So, and then that also started, Walter said, so based on that, should we buy a put for $62 for a couple weeks expiration date?
You could. I don't want to like flat out say yes, you should. So my goal here is not to tell you exactly what to do, but if you look at, if you take into account all the information that's being presented, and not by me, but just by like analysts out there, by what the technical charts show, it shows that its run up is reversing. It shows that the green, like on the MACD, the green is starting to slow down and starting to basically head towards being red, although it's not there yet, and it could always flip back up. Buying a put, I personally don't play, I don't buy calls or puts on weekly expirations, just because that's, in my opinion, straight gambling, because you're basically like saying, I think it's going to go up or down for this week. So I don't really like to do, if I gamble, it's on selling puts, right? But on buying puts and calls, I don't. If you go longer out, maybe, possibly, but I'd have to like take a look at it in a little bit more detail.
Okay, and then we had another one from John. As a growth investor, what are the best data points used for your fundamental analysis?
Oh, there's a bunch. So I look at industry growth, which, I kind of talked about, like based on that stat I provided. I look at industry growth, what's projected in terms of growth rate. So the growth rate, not so much a dollar amount, but just the growth rate. For specific companies, I look at total addressable market, because you want to know, like, are these guys a leader or not, right? Like, are they, do they have a lot of market share of that market or not, right? So I'll look at TAM as an abbreviation. I'll look industry growth rate, TAM for the addressable market for this company. I will look at Things like growth in customers, that metric's not the easiest to find because sometimes it's private, but if you can find it, great. And you're looking like for historical year over year to see how they're growing in their customer base. Because obviously if they're growing by leaps and bounds, or they're growing at a larger percentage than their next competitor, then like, okay, solid company, people love them, they're strong, well positioned. So I'll look at that. I do also read analyst reports like on valuation. So, discounted cash flow, there's like a bunch of models that you can run and everyone has their own different model that they run. I mainly look at that just to understand like what's a fair price, right? But at the same time, in a market like ours today, which is a lot of it's based on sentiment, fair price doesn't really hold. I can get into more detail another time, but just, like fundamentals right now in this type of market doesn't really hold well, unfortunately. But I'll look at that. I look for things that Warren Buffett looks for, which is like, do they have a competitive moat, right? Like, are they insulated from the competition to where if someone does come and try to take market share, can they sustain their growth and keep the competitors at bay? Those are just a few on the top of my head. There's a bunch of others, but yeah, if you want to, whoever asked that question, if you want to ping me, I can go into a little bit more detail and like give you like an exact list. But off the top of my head, those are like some of the bigger ones I look at.
So
Can I chime in real quick? In terms of fundamental analysis, if you have Charles Schwab and you go under the screen/research, you can look at that. Gives you a lot of information with in terms of their fundamentals. It also explains what their market cap is, also what sector they're in, so that can give you some more information. So, or in Thinkorswim, there's a research section, and that can also give you a better idea too. And another thing too is to look at how much percentage is being held by institutions. That's what I've done when I wanted to do some longer term option plays. I've done that because if a large amount of institutions are holding that, they've done their research a little bit more than we have. That's my opinion.
Absolutely.
So that's just something to look into as well.
Then one more quick question before we move on, but go ahead, Dan.
I was just gonna say, the last thing that Chris said, totally agree, right? So I'll give you a very good example, Palantir. If you guys follow it very closely, ARK, which is like Kathy Wood, ARK, everyone knows of ARK. They've been every day buying shares in Palantir. So like to Chris's point, like these guys, they do their research. So if they're buying, they obviously either know something or they know more than we know, but I would trust they know what they're doing. But yeah, to Chris's point, if institutions, especially like really solid ones, hold a lot or they're buying, that's always a good indicator as well.
So, and then somebody asked real quick, how do we know the momentum in the stocks beforehand? I see people mentioning pre-market movements and charts.
Yeah. So this is why this is the reason why I went with my presentation. Like I try to identify sectors that I think will do well. As a retail investor, I'll be flat out and say like, there's no way that I'm going to beat the institutional traders to being ahead of the curve when it comes to, one day they may all decide, you know what, we're going to pump this sector and pump these stocks. There you go. And now the momentum starts, right? There's no way I'm going to beat them to that. What I can do though, as a retail investor is I can say, hey, let me look in the next couple of years where this world is heading, where technology is heading, where the markets might be heading, what's going to be affecting. Like for example, a really good example, which we just saw a slide on, is clean and renewable energy. Yes, it's been around for a while. This administration may pump it more, but I think just in general, like the world needs to head that way, period. Right. So, I do that type of analysis in my head to say, okay, then I want to be in this sector. That way, if I can get in now, if there is ever like a big momentum spike down the road, at least I position myself. Will I ever time it perfectly and get in right when it happens and get out right when it ends? No. And I know that. So for me, it's easier to go longer and just say, I'll just get in now, ride it out. wait, when it happens, great. And then when it's done, then decide what to do next.
Cool.
But like in terms of indicators, Chris can probably answer this better than me. Like Chris, what kind of indicators do you look at from a technical perspective?
Well, it's really interesting because right at 2 a.m. our Arizona time, what you can kind of have an idea of where it's going to go. In terms of technical analysis, it's kind of hard pre-market unless you see some big news that's occurring. A good one would be Alibaba. There was a huge price movement going downwards before the news hit about about China and talking about the company. But that's something like, unless you're really eyeing that specific stock, you wouldn't know because it's not in the news. But then when the news hit roughly, and it's interesting because the news hit at 1:45 a.m. our time, and guess what? When do you think the stock market truly opens? 2. So if someone who actually had a keen eye on that, and that's why you have scanners. So you can do a pre-market scanner and a post-market scanner, and you can set up everything. So things that I would look for on a technical standpoint was there a percentage of price movement given a specific time frame or given the average daily range and the volume? Because normally volume after hours, it's relatively low for a lot of things. Let's say like 5,000-10,000 per 5-minute candle. But with the Alibaba example, there was 65,000 in terms of volume sold. And they sold, and I think it closed at like 235, but then Alibaba the next day went to like 211. So I'm thinking someone had some knowledge that they knew the government was going to come after them. So when you see those large price fluctuations with a large volume, again, it's not causation, it's a correlation, but then you can kind of get an idea of where that's going to be going pre-market or post-market.
Yeah. So, and Dan, let's keep going because I mean we're already almost at time, but obviously we got to get through your stuff and then to Corey.
Yeah. I'll make this quick. So like the last sector is just basically rebound plays. I mean, we all know eventually once the pandemic ends, there's a bunch of these that are going to come back, like airline industry, people are going to travel again, retail, people are going to be able to go shop. So it goes without saying, there's some like pretty obvious rebound plays out there. So I'm also just trying to play that too, for whenever the pandemic does end and we can go back to normal, right? All right, so then that said, I'll leave everyone with my personal thoughts and tips for 2021. And some of this is actually probably y'all should know anyway. So our market right now, as I mentioned, like the sentiment is high. It's very, very bullish, which is great for making money. But I want to make sure everyone stays grounded and realize like this doesn't last forever. Like the market doesn't always go up all the time for the rest of our lives, right? At some point it's going to correct. Right now, based on what I've been reading, and if someone's going to ask me, well, when do you think it's going to happen? I don't know. There's like no way to pinpoint. It's going to happen on February 27th at 9 a.m. Pacific time. Like no one knows, but it'll probably happen. Anyway, my point is like right now, based on indicators such as like there's a Buffett indicator that's approaching a record high. There's indicators such as like the margin debt and call option volume is trading at a ridiculous level, never seen before. There's high gamma on options, which don't ask me what that means because I'll have someone else explain it, but I know it's not a good thing. Obviously, there's a disconnect from economic reality because there's a lot of people that don't have jobs right now, right? And there's a lot of people that lost jobs, right? And can't afford things, right? The Fed keeps printing money at an alarming rate. And then the one stat that always sticks out to my head is like this market has seen the most retail investors into the market than it's ever seen in prior years, which is not a bad thing. Like I'm glad people like want to invest, but a lot of these investors are not investors, they're actually gamblers. Like they're gambling on stock price movement. And because they're gambling, it's creating hype, and hype creates price fluctuations up, thus driving stock prices to like unsustainable and unwarranted levels, to be honest. Anyway, my point is there's a lot of signs out there that you should be aware of because at some point in time, this market will correct. And you just want to make sure that, for your own portfolios that you have basically your ready for when that happens. I don't know when it will happen, and it's great if you can get out before it happens, but just be aware. That being said, until that correction happens, they say that the trend is your friend. So yeah, absolutely. Like ride this trend, ride this bullish trend. Right now we're in a good bullish trend. We have been, since the bottoming out back in March of 2020. Like ride it, make money. Like we should all take advantage of it. Just be aware. All I'm trying to say is just be aware that at some point the market will correct itself. I don't know how bad, but it will correct itself. So I just want to put that warning out there. That being said, for me personally, I'm also looking at emerging markets, which I already mentioned, inflation, which is another thing that could negatively affect the market. It's being talked about that we may have to, or that we may for sure see inflation this year. So be aware of that. What else? Something simple like don't take more risks on than you should. I think that goes without saying. Like people should definitely not. And there's stories, right, about like the guy that was $700,000 in margin and, killed himself. I mean, just for all you investors, traders, and people out there, like listening to this call or viewing this video afterward, like just be aware of your risk tolerance and make sure you're not taking on more than you can handle, because it could come and bite you in the ass and then you're fucked. So don't do that. For me, I think cash is king as a trader, and Chris can attest to this. Like we like to stay in cash. And I stay in cash for my short-term positions. My long-term, I don't touch. I let them sit. I let them do their thing. But then if I'm trading puts or trading, short-term plays, I'd rather be in cash at the end of the day and play against the cash. But that's just, something that traders do. And then last but not least, like be patient. I know we're all loving this trend, the bullish trend, which is great. I see a lot of people in the group saying, oh, is now the right time to get in? Is now the right time to get in? Is now the right time to get in? And that's fine to ask questions. At the end of the day, though, like making sure you maximize your profit is all about being patient and waiting for the right entry point and not chasing a stock. You can chase it because there's still, if it looks like it's still going to continue momentum and you're day trading it, sure. But there's going to be a lot of plays this year, a lot of great plays. I don't know. I mean, Connor and Chris, you could probably attest, like, FOMO gets a lot of people, bites them in the ass, emotions. We're all here, like Connor, myself, Chris, Ken, other people in the group, like we're all here to like hopefully help impart wisdom and help you guys become, again, better traders and investors, to not succumb to FOMO, to figure out how to control emotions and to figure out how to assess for when a good entry point is, and amongst other things. Anyway, like these are just like little quick tips I want to leave the group with. I know we've been asking a lot of questions. If there's any more, I want to make sure we leave time for Chris, but I'm happy to answer anything like offline if you guys want to hit me up. But
and did you have, did I email you Chris Hours or excuse me, Corey's portfolio? Did I send that to you?
Oh, I think you sent it in the Facebook message thread that we're in.
Okay.
I do have one more thing to add, just for the 2021 tips and strategies. Just so everyone knows, when you're buying a foreign company such as Neo or Baba, you are owning the stock per se, but those are what are called ADRs, American Deposit Receipts, which basically a firm has another firm in that country of origin that purchases the stock on your behalf. Those are also subject to double taxation. China, I don't think there is double taxation if you were to sell it, but also you have to think of inflation and the dollar value. So for example, if $1 today is equal 10, is it wons or yen? Whatever their currency is, that can change. So that can also affect the price of those Chinese companies or other countries. So make sure you want to diversify too, like Dan was saying, but also do your due diligence on seeing like, okay, is this stock that I'm owning, is it an American company? So that way it's dollar for dollar, or is it going to fluctuate? So if you see ADR in the stock when you pull up their company, that's what that means. So just kind of look, that's more of an advanced tip, because like right now we don't have to really worry about that. But if you're holding things for long term like Dan does, that's also another thing to consider.
Can you guys see my screen now?
Yeah.
Okay. So here is Corey's portfolio in front of us right here. So, and Dan, I know you and I kind of looked at it a little bit. What kind of recommendations do you have? Do you like it? Do you kind of give me your thoughts here?
Some of these stocks I'm actually not familiar with, so I would have to research. But like Tesla Plug, obviously he's playing, the EV space. That's cool. I'm doing the same thing. Microsoft is always a solid stock, in my opinion. Like it's a solid company. They're not going away anywhere. It's like a solid long-term hold. So that looks good.
I like the NVIDIA one because NVIDIA makes a lot of the chips for graphics processing, which is also good for data mining for crypto. Also, I believe, well, originally NVIDIA was in partnership with Tesla in the beginning with their automated driving or autonomous driving, but I think Tesla then shied away from it a little bit. But also, NVIDIA is making other contracts with other EV companies to do their guidance software. So NVIDIA is kind of like the powerhouse for graphics processing. I don't know if Connor would agree with me or that or not. But no, I'm kidding. I know you do. But,
so ask my computer that question.
Yeah. So just so you know, NVIDIA is a really strong company. I got in on NVIDIA. It's so interesting on how some of these companies I got in so cheap, but NVIDIA was trading at $56 when I bought into it, and then it rose to 300 in 2016, and Plug. I was trading Plug at $2, and it was less than $2, and that was in 2017. So, but the other thing that I was looking at, the Bingo or BNGO, that one seems decent because I know a lot of states are going to deregulate kind of the gambling laws for online betting. I don't know what DVAX is. Do you know?
I don't know what that is either. Or the store.
Yeah, the STOR. I'm trying to look at it.
PCIV, I have heard of it.
And Corey is on this call.
Yeah, so the Dynavax is my free stock that I got. That's
Nice.
why it's just put in there. I took and bought more shares of Plug recently. That's why you see the difference in Plug. These are two separate screenshots, but I allocated a lot of money towards Tesla. I've been buying Tesla up. My entry was in November at 495. My current, let me see, with all my average price for Tesla is in this mid 600s because I've added stock to it. That's been like kind of like my golden child. And then I have a lot of penny stocks that I never put into the screenshots that I sent you guys because I day trade those. And I mean, they're doing pretty well, but I mean, unless you guys want to talk about penny stocks, but I sent more of my longer term holds, and that's what you guys see here. NVIDIA, Plug, Tesla. I'm kind of iffy on BNGO right now, but we'll see how that all pans out. Apparently, I mean, it almost broke $10 yesterday, I believe. My reason behind Churchill Capital is because I honestly got it off of. I'm in a buy sell short group, and they were just blowing it up, and so was the group, our group as well. The Let's Trade and Invest Together, they're just blowing it up, and I'm sitting here like, damn. Let me try to just get in on this. Just 15 shares, nothing big. So trying to ride that out. Don't know if I sold it today. Actually, I might have sold it today. Yeah, I sold it today. I don't even have it anymore. So
I'm looking at STOR. That's a REIT, or real estate investment trust.
yes.
That actually, the housing market, and it's funny because they're based in Scottsdale from what I'm looking at, but they go all across the nation. And I know, I think right now real estate, even though in Arizona real estate's going up, and now that the easing of restrictions from the pandemic, because at first, I mean, there was a ton of people leaving New York, heavily populated, heavily dense areas. But I'm thinking after, it really depends though on a number of things. Where are a lot of companies going to still do the work from home, or are we going to transition going back into the office? So I would just say hold on to it now, because it looks like it had a strong trend for a while, but I'm looking at the 1 day, there was just some minor pullback come the new year. But I'd say hold on to it, but maybe watch it, just kind of see, because that's more going to be, if a lot of people are are going to be selling their homes to go to a smaller house. I don't know how that would affect their revenue, because they may have because if they sell their $400,000 house, but then they buy a smaller one, but then again, how many people are going to buy the bigger house compared to the smaller? So just something to just kind of eye on. But right now it looks like it's going up, and there was a dividend payout. So generally, when the dividends pay out, that stock will drop for a little bit. But I'm not sure why it was dropping a little bit for the week of January 4th.
Well, and I was going to say I like it. Like it's a pretty good spread, and I'm a big fan of Tesla. Probably that's my second favorite stock, other than the Palantir. I don't own a Tesla nor any Tesla clothing, but I probably should.
Oh, you don't have the shorts? You need the shorts, man.
How come you don't have the tequila?
I'll get it all someday. But I think being heavy on Tesla is a smart play. Just because I was talking to my father, who's a financial advisor and has been his entire life. And we were talking about Tesla and how, at one point in time, the EV Tesla, the vehicle market, is going to be their least producing aspect of it. Like at some point, Tesla is going to be powering your house, and or they're almost going to become like a utilities company. And so I think it's good to go heavy on Tesla. Personally, obviously that's not my advisement, but I like it a lot. But and then Nvidia is good. Plug, and then just like Dan said, Microsoft is always a good choice. I was big on BNGO. I sold a couple calls yesterday, and then I bought more this morning during the dip, and they've done pretty well for me. So I like the spread. So, but that's kind of just my input here.
Oh, also, I do want to point out I made a mistake. I thought BNGO was DraftKings for a second, because I was thinking bingo.
No.
So I know I look at it now. It's the genetics company. So yeah, I like the BNGO. I think it has promise, depending on the research that they provide.
Yeah, there's a lot of good stuff out there. If you do deep dive research into BNGO, and just that whole sector into biogenomics or however you say it, there's some cool stuff happening. So I have high hopes for BNGO. What's his name?
Yeah, so this my portfolio is based off a lot of the it's kind of a mix up, but I mean, it's heavily in the longer term holds are like, the Tesla, the Microsoft, Nvidia, which, I'm up in computers, and I'm like big on gaming, and just into that industry because I do film producing, and we work with a lot of gaming companies and stuff like that. I mean, I just felt like Nvidia has always been strong. So has AMD. My reasoning for going heavily into Tesla is, I mean, I just invest in companies I truly believe in. Like, and I mean, Elon Musk, dude, that guy's an interesting fella, and I really do believe that what Connor said is pretty true. Is like Tesla has, I mean, he's an investor. Elon Musk is an investor in a lot of things, and he has a lot of like startup companies, and he's just doing a lot of stuff. So, I mean, he just became the richest man in the world too. He's just an interesting guy, and
Yep.
I kind of love that about him and about the companies he's in, because I feel like even though I'm investing in Tesla, I also feel like I'm also investing in the boring company and SpaceX, even though it's not necessarily true. It's like you're investing in the idea and the potential of what this the CEO behind the company is bringing to the table. So that guy is just like, he's on a different wavelength, and I like it. I dig it.
So the question is, what graphics card do you have in your computer?
3080.
Oh man, I got the 3090.
Oh, nice. So I know it's like a lot of people are just like, oh, what the hell? But I'm one of those guys who sold PS5s and graphics cards. And I did it all manual. I would get them manually. Like, I'm in a bunch of Discord groups, and we would just ping. We just get alert each other when things drop on Best Buy or Newegg or anything like that. I mean, I've made a little bit south of 10 grand flipping PS5s and graphics cards in the last 2.5 months.
Oof.
So just a little bit south.
Hustling.
8-9 grand. Yeah. So, just, and then with that combined, I've gotten my portfolio to above 25K. So I started day trading on Robinhood. I did do a small migration to Webull. I initially got into Robinhood, wanted to go to Webull, got a little intimidated by it. I had my Tesla. I initially bought my Tesla in November. in Robinhood, and I looked at the, transferring it over to Webull, and then the price threshold and all this and that, and I just kind of just parked my Tesla, just kept it in Robinhood, and then I came back to Robinhood because I started day trading Dogecoin, Bitcoin, and Ethereum, and just getting profits off of just the quick flips, the buy and sell short
Yeah.
off of those. Yeah, it's unconventional, but I kind of like playing it risky. I mean, I started with 8 grand and I'm above 20, so
Nice.
yeah.
Dan, do you have any final thoughts?
On Corey's portfolio?
Yeah, on Corey's or anything?
No. We talked about each of the stocks. The key thing, Corey, that Corey said is like invest in companies that you believe in and that you like, right? Because then you're gonna follow it closer, you're gonna understand it better, but more importantly, like it's something that you believe in, right? Like unless you're day trading and you're just trying to find stocks for swings, like long term, definitely I subscribe to the same theory, which is I only invest in things that I truly believe in the long term.
Cool. Well, and just for everybody here, we are sending out if you're subscribed to the newsletter, the halftime show comes out today. We have a 1-year option where it's $99.99 instead of the $120 it would be doing the 1 month option. And then app stuff will kind of be releasing over the next few months. So keep on check for that. And then again, if you guys have any questions for us that we didn't answer here today, message Dan, message myself, message Chris. We even can put you in a group chat and answer all the questions, but I'll put the recording on the good old YouTube here as quickly as I can. But if you guys need anything, just let us know.
What's Ken up to? Is he writing the newsletter right now?
Yeah, so he's putting the kids. So Ken is pretty busy. So luckily he has like myself and a few others that can kind of help run the show. But he's got 2 kids, put the kids to bed, and then during this he told me he was getting the halftime show prepared for this evening.
Oh man, I know well. I shot their wedding. It's interesting because in April, Ken's like, "Hey man, I'm starting this investment group with my buddies. Can you film some videos for us?" I'm like, "Yeah, for sure." And then he's like, "Man, we still got a lot of groundwork to do. I'll touch base with you." So I'm actually supposed to, because I'm in Arizona currently. But Ken he touched base with me. He's like, "Yeah, man, we got to get some video work done because he wants to up the production value of what you guys got going on."
Oh yeah, and you and I will talk after this for sure because we're gonna be down there I'm flying down on Thursday, so tomorrow.
Oh, nice.
So we'll have to link up at some point. But everybody, thanks for coming. If you guys have any questions, feel free to reach out. Okay.
Thanks, everyone.
Thank you.
All right, guys.
Yeah, you guys have a good night.